Welcome back to the Middle Tech Podcast. You've got Logan Jones and Evan Knowles here at the Awesome Inc. studio. And we just sat down with Raechele Smalls, who is part of the Endeavor team. So this is the third interview we've gotten to do with the folks over at Endeavor. They do awesome work all across the world, really. So Raechele is part of their office that operates in Kentucky, Indiana, and Ohio. And Raechele's role is going to deal primarily with access to capital, which is something we've been talking a whole lot about here recently. And they have just launched a new platform called the Endeavor Edge platform that is really addressing a lot of those problems with access to capital that we've been talking a lot about. And I'm going to let Evan kind of summarize a lot of what we talked about with this conversation, because if you've been listening through these past couple episodes, you know we've been talking a lot about Evan's experience fundraising in this region. So there's a lot of good topics covered and perspectives given in this episode.
Yeah, I mean, fundraising's hard. We as founders need every tool we can to help us on that front. So Endeavor is really stepping up in a big way and bringing a toolkit to founders to help them with that. You know, a lot of the things I experienced, frankly, were just because I was born where I was in Middle America, and I'm starting a business here. And so there's, an uneven playing field here in Middle America in the past, and that's starting to be even out. And Endeavor is really stepping up at the right time to help founders, get out into the world and raise capital in a really efficient and educated way. I think some of the problems that we face here in Middle America are, just access to capital. There is capital here, but it's hard to find. It's hard to unlock. And that's something that I think this Edge tool is going to help a lot with. But also one of the biggest problems we have as founders raising money in this region is just mindset. So many of the investors around here are just stuck in the old days of what it was raising money pre-COVID. Everything's changed, and it's a new world. Valuations have changed. The way people raise money has completely changed. So much has changed about raising capital that now it's time to put the founder first and figure out how do we create a new way for capital to be raised and grow businesses, because the way startups are built now have completely changed. So I'm glad Endeavor is stepping out and doing this. After having just gone through that experience, I wish Endeavor Edge was there when I first started my journey. And that was only 6-7 months ago. So I'm so happy to see that they're stepping up now. Before we get into the episode, let's hear a word from our sponsors.
Middle Tech is presented by KY Innovation, the Kentucky Cabinet for Economic Development's entrepreneurship and innovation partner. KY Innovation exists to support and develop Kentucky's startup ecosystem, and we are proud to work alongside an organization whose mission aligns so closely with ours. If you're a founder building in Kentucky, you need to check out the resources that KY Innovation has to offer. You can find more information at kyinnovation.com.
Middle Tech is sponsored by Render Capital, which is proud to present this year's 2022 Render competition. Are you a startup founder who could use $100,000? If so, our friends at Render Capital want you to apply. Render Capital invests $100,000 into 8 early-stage startups each year to help them scale their solution and attract future investment. Your startup should be one of those startups. I was one of those startups. My company, Simba, won in 2021. It's been an amazing experience. Patrick Henshaw and that whole team there at Render Capital are doing amazing things, helping entrepreneurs. And I encourage everybody to apply that has a startup that fits the criteria. And applications are open now, and the deadline is May 8th. To learn more about the Render competition and apply, go to render.capital/competition/. Or check out today's episode description for a direct link. Again, that's render.capital/competition/. Our next sponsor is the Johnson Law Group and Brandon Johnson. Brandon represents my startup, and I've had great experience with him and works with companies from inception to billion-dollar valuations. Whether you are trying to formalize a side hustle or bring new technology to market, the Johnson Law Group is willing to help by offering a free 30-minute consult. Schedule yours today at thejohnsonlawgroup.com and tell him that we sent you. All right, what's going on, everybody? You've got Evan Knowles and Logan Jones recording out of the Awesome Inc. podcast with one of our favorite organizations. They are doing amazing things here in the region around Indiana, Ohio, and Kentucky. And we've had several of their team members on our podcast in the past. I'm sure you're familiar with Endeavor. So they're doing amazing things around the world. And again, within this region, we're sitting down with Raechele Smalls. She is the manager of the entrepreneur selection and growth, as well as the access to capital lead. So welcome to the podcast.
Awesome. Thanks, guys. Thanks a ton for having me. And as you mentioned, huge fans of all the things you guys do. And, thanks a ton for all that you continue to do with our entrepreneurs and covering their story. So
Yeah, well,
excited to be here.
we were just laughing before we started at how many intros you guys have actually given us and how many Endeavor entrepreneurs we've had on the podcast. I don't know the number off the top of my head. There's a blog out there somewhere that we've written about how many
Yep.
we've had, but by now, I mean, it's a lot of our guests. So thank you guys for supporting us and all that you guys do.
No, it's awesome.
But yeah, so as we kick off here, as we like to do, let's just briefly go over your background and your educational background, professional background up to Endeavor.
Yeah, happy to. So a little bit about me. Originally from a small town outside of Louisville, Shelbyville, Kentucky. Was a student athlete and kind of played sports all throughout. Eventually got afforded the opportunity to get a scholarship to play Division I. And fun fact, was actually able to play for 2 schools. So I got 2 varsity jackets for 2 colleges, which is interesting. So played at Marshall University for 2 years. Then transferred back home to play at Eastern Kentucky University, right down the road. So all college was Appalachia, which was very interesting and fun experience, but eventually made my way back home to work for my family. So was born and raised in a family of entrepreneurs. My parents had a small private practice in this small town I was from. And it was, very much got bit by the bug of entrepreneurship pretty early, just growing up in that household. And when I was able to come back after school, was able to help that small private practice actually expand and grow into a behavioral health corporation, providing therapeutic treatment and services. And I kind of focused mainly on biz dev, operations and management, and of course a lot of community liaison work, marketing, design and what have you.
Wearing a lot of hats, yeah.
A lot of hats. I mean, that's the entrepreneur way, right? And so, really pivotal experience, of course, for me. But that led me to kind of do a little side gigging and continue to do marketing, PR and doing a lot of design work for small businesses, underrepresented founders specifically in the region. That then led me to get plugged in a ton around the Louisville ecosystem at the time. And so, really, got my beak wet in terms of learning a bunch about, the startups that was in our community, the innovation that was happening, and really noticing kind of a lot of the gaps that was around servicing founders, specifically the founders I was working with, right? So really trying to be that kind of connector, if you will, to say, hey, you should talk to this person, you should talk to that person. That luckily led me to come on board and alongside this entrepreneur center at the time, which was called 1804. So it was a regional entrepreneur center, very much kind of the front door for entrepreneurship for founders. And I was allotted to, be able to come on alongside them through this fellowship that was funded by Community Foundation, but was specifically focused on mapping the ecosystem, finding out who in fact was the founders, the funders, the service providers of our region, but more importantly, focusing on women entrepreneurs and founders of color. So I would say that was definitely the pivotal role for me and somewhat of the training wheels, if you will, for Endeavor, mainly because we were, day to day meeting with entrepreneurs, finding out their challenges, figuring out how we can kind of put solutions together for that, throwing tomatoes at the wall and seeing what would stick.
Yeah.
But more specifically too, the other piece for me was creating programming, creating, solutions and, really trying to resource the entrepreneurs of, the region. Happened to bump into, and collaborate a ton with the Endeavor team that was there at the time. Would work with a lot of our Endeavor entrepreneurs at the time. At that time, the office was at 10 selected entrepreneurs. And so they would inevitably do what entrepreneurs do at Endeavor. They would give back. They'd mentor our companies. They'd come in and speak to our startup grind events, and really was kind of the first foray introduction to the organization. Just so happened, also got lucky again to come on board with the team when the position opened, and again had only the kind of understanding or knowledge about the regional kind of impact of Endeavor, because I've seen it firsthand with the entrepreneurs. Little did I know, of course, the full gamut and effect of the world and global expanse and breadth of the organization, how it is very much the leading global organization and community for entrepreneurs. So a little bit about me, quick I guess high level on the background, but yeah, I mean, from there, the Endeavor experience, of course, has been nothing but a learning journey, and probably I would call it my second MBA since then.
We'd love to point listeners to episode 177 or episode 148 to learn more about Endeavor. We sat down with the Endeavor global president, Adrian, and also Jake, who is up in Indianapolis, and they're doing amazing things in their own rights, both at a global level, but also regionally. So if you want to learn more about Endeavor and how they can help entrepreneurs or help yourself as an entrepreneur, go check out those episodes. And on this episode, we particularly wanted to talk about how now Endeavor is helping founders with access to capital. That is something that this region needs a lot of help with. I think there is capital in this region, and there's always capital that will find great entrepreneurs, but I think we need to figure out how to unlock it in better ways and give founders more avenues to find it and take advantage of it. And so real quick, dive into high level, what is Endeavor beginning to build to solve this? And then I'd like to get into what this region is struggling with after you kind of explain that.
For sure. Absolutely. Can't echo you enough in terms of listening to those 2 episodes, of course. And thanks a ton for having our team on that. But yeah, so a little bit about kind of, Endeavor and kind of our access to capital services. I'll kind of start there just because it is one of the, kind of key components and areas of servicing that we do offer for entrepreneurs. So, just again, Endeavor, of course, being this global network of entrepreneurs, leading high growth and high stage companies, shifting GDP, shifting economies around the world to try to build ecosystems that, support entrepreneurs and clearing those barriers. We typically focus our servicing in 3 main buckets, one of those being access to capital, the other 2 being access to markets. Makes tons of sense because we have boots on the ground in 40 different markets around the world with 500 other staff like myself who go through and search and select these companies. The other bucket, of course, access to talent. Everyone, of course, knows conversation of the day and knows that's a challenge for each entrepreneur. But when we look towards access to capital, it's a very unique, way in which we're able to support entrepreneurs. And, specifically for, kind of our team and how we kind of look at that. For one, we see ourselves very much as a catalyst and really a champion at the same time, meaning, we try to clear as many barriers as we can for the entrepreneurs that we support by surrounding them with key advisory, and key mentorship around, how to really best approach and best prepare for their fundraise, and more specifically to giving them that kind of access, that network access that they need to, get connected with the particular funders or investors that would be best fit. Actually giving them unbiased advisory and folks from the space, from the venture ecosystem that can, give them feedback, not just from a pitch standpoint, but really around, their raise, their particular goals. What's the market even looking like at that time? How can we, from a high level, be able to plan your fundraise from this stage forward and how to be smart about that, right?
I think that's kind of hard to find, as a founder. I just went through this, and it's like, you either go talk to other founders, which I think is one of the best routes to take.
Yeah.
The founders that have raised money prior to you, but also it's hard because the other people you would find yourself talking to are investors.
Yes.
Or the people that sit between investors and the founders. And oftentimes that could be biased. You're seeing that,
For
that
sure.
I experienced that with valuations.
Absolutely.
Those investors, of course, they're going to talk lower valuations, and those people that sit in between the founder and the VCs might want to get lower valuations, and they might not even be paying attention to the global and United States valuations outside of Kentucky.
Absolutely.
And so that is a form of bias that really is hurting founders, and I experienced that firsthand.
Yeah.
So I think that third party perspective, like you said, is super important. It's hard to find, and that's something Middle Tech's looking to help with going forward as well.
Absolutely. And I think more too, like, being able to, for one, provide that type of, again, feedback, advisory, and having that lens that's founder first. But really the other kind of key components that we bring to the table from an access capital perspective is trying to, be that sort of thought leader around, how to, fundraise and how to make smart capital decisions, specifically when it's early in the journey of that company. And if we can kind of, almost kind of help set the standard for folks to really, understand how you deploy capital in a way that really supports the entrepreneur first, and not just from the dilution standpoint, right? Because we could talk about that all day, but even from on the other side of the coin, when you're at the kind of negotiation table, when we're going through governance and all these kind of terms are kind of going across, those are very important decisions that entrepreneurs sometimes don't even know that they're making. And if they don't have, again, key advisory kind of at their side to really help them navigate that, it can really kind of come back and bite them later on. So
from your perspective, what are some of the biggest challenges that entrepreneurs face when they first go out to raise? I'm sure it's kind of different whether it's a first-time founder or whether it's somebody who's done this before. But from your perspective, what do you typically think is the most valuable thing that Endeavor is helping out with in terms of access to capital for entrepreneurs?
For sure. I mean, so definitely on our end, again, not only do we kind of leverage our what we call mentor capital program around giving that advisory piece, right? We also have two other tools at our disposal, of course, which I didn't fail to mention. But, the other tool that we do have is, our Endeavor Catalyst Fund that does co-invest into entrepreneurs. It's a rules-based fund, specifically focusing on Endeavor selected entrepreneurs, and has, again, some criteria around that as well that we are able to leverage and use. That said, it's an interesting fund because we're able to, again, have somewhat of this, founder first and founder centered approach around capital deployment for ourselves. We also, again, have those really curated relationships that help us to be that value added partner for the company. And so across the board, when we are working with entrepreneurs, no matter the stage, we're very big on number one, timing for one, and making sure that the entrepreneur starts well in advance in terms of if they're even thinking about raising, right? Or if they're thinking about trying to select what, how to fund their companies. We really try to, get a hold of them, or more so like get in front of them as early as possible, so that, one, they can fully understand and, very well know that fundraising is it's not easy, right? It's extremely difficult. We know this, and well, no founder enjoys fundraising. But more so specifically too, like really giving them kind of just the full gamut of understanding. This will take time. Like this will be almost, if not, 50 to 100% of your time. So putting things in place for your team to know that like, hey, I'm going to actually, for the next couple months, for however many long, this is going to be, my focus. I need you to kind of do such and such, right? Just putting things in place and getting to the preparation stage in a timely fashion.
Yeah.
And not too late to where you're, running out of cash and that's when you're needing to raise. That is not the optimal time.
Yeah.
Timing is so important, because, to your point, what's your cash situation look like? Do you even have any cash? How long have you been bootstrapping? How long can you bootstrap personally before you have to shut down the business or get capital to pay yourself? All those things are super important. And to your point of mixing the timing with preparation, one thing you cannot do going into a fundraise is go in half-heartedly and just stick your foot in to test the waters.
Yes.
Because you're just going to get scared. Mm-hmm. So when you start fundraising, you got to mentally prepare yourself to say, if I don't finish this fundraise, my company's dead. And I'm going to go all in on this, and it's going to be a full-time job.
For sure.
Because if you just dip your toes, then you're going to end up not raising the full round, or you're going to give up.
Absolutely.
And you can't have that mindset. And so mixing that right timing with the preparation, if you're well prepared, you're going to feel way more confident. You're going to go in way harder, and you can't just walk your way through fundraising. You got to sprint as hard as you can, meet as many people as possible. And that preparation point, I think, is what a lot of founders miss, especially around here if it's their first fundraise or they don't know any other founders. And I noticed that just recently because when I started being more vocal about it, I had a lot of first-time founders reach out to me.
Yeah, absolutely.
And they're like, "Hey, I'm starting to prepare for a round." I'm like, "What are you doing to prepare?" They're like, "Well, I'm just talking to a investor here and there, and I'm asking them if they're interested." And no, take a step back, fully prepare, get confident, and then just go as hard as you can. And that's something I think is not talked about enough.
And I want to point to that too as well in terms of your kind of founder to founder interaction, right? So that's another kind of area that we often bring to the table as a value from our network, right? I mean, for one, in addition to, right, getting mentally prepared and preparing your team, preparing your company, for the fundraise. The other piece too is, getting deep understanding of how much you're going to need, what the market dynamics really kind of look like for your team, for your company, for your industry. We provide that, of course, through mentorship, but it's really important for entrepreneurs to do their own homework, right? Before they kind of get out there and really just start pitching and fundraising. That goes all the way through from learning, kind of where you are from a stage standpoint, where the kind of market is and how kind of salvageable of an opportunity you're kind of building, all the way through to researching the actual funds that would make sense for your team, right? We walk entrepreneurs through that process as well, but this is really important to kind of almost educate
set
yourself to a sense.
expectations going in, because if you haven't
100%.
fundraised, you're like,
Yes,
oh, I'm just going to talk to some investors and ask for money, and it's going to take 3 months.
absolutely.
Well, I mean,
That's not how it happens.
and when
Absolutely.
you think of access to capital,
Mhm.
it kind of what Evan's saying there is, that founder to founder interaction. It's especially with first time founders. What does it mean to get access to capital? Essentially, it's access to relationships and
Yes.
access to those people who are connected to investors or the investors themselves. So the value that Endeavor's adding by having that network of not only entrepreneurs that have done it, but also you guys are very connected with, investors in the region as well. That's what access to capital really means to me,
100%.
is being able to get in front of the right people. And I think you guys do a great job of that. We've seen it kind of in a different perspective, not necessarily investors, but you guys just are such great connectors. And you were talking about that's a huge part of your role as well.
You guys have
100%.
literally a list when you come in on that Edge platform. That is a list of investors, right? Could you talk about that for a second?
We have. So and thanks for concluding that, because to the point, like that is the main challenge, right? When we talk about what's the main challenge for entrepreneurs in markets like ours, as well as the 40 geographies that we support, it is that network access, right? And that's Endeavor tries to do that time and time again to enable that kind of network access. Definitely, founders are kind of some of the best connections to quality investors, particularly oftentimes investors really treat entrepreneur intros higher, right, in terms of meeting companies and meeting great founders. But yeah, having that kind of network access and the vested trust that we've built over the 20 years really kind of helps to enable more of that network access for entrepreneurs. We try to very much make that network connection more seamless with our platform.
Yeah, so let's talk
and
about
so
that.
yeah, one of the areas you were talking about and mentioning, of course, is the fund map that's placed on Edge. So from a high level view, conclusively, right, Edge, the whole gist of that platform is to create kind of a go-to destination for all entrepreneurs of any stage that is looking to prepare for their fundraising journey. And so the area you mentioned, of course, was the fund map, which is we've actually, again, kind of mapped out and identified, some key vetted investors in our region, specifically across the U.S., mainly from our kind of network and from the vetted kind of relationships that we've had, but more specifically to give entrepreneurs that first question of like, who's in my backyard, right? Who's actually kind of investing in my region? The list itself is actually divided by, stage as well as industry kind of focus, and other kind of criteria pieces around the fund itself. These pieces of information is extremely important for entrepreneurs when they're starting to curate these lists and get these target lists going of investors, because again, all of these particular things about a fund is really important for you as the entrepreneur to know who to actually target and who to actually try to curate relationship with, and that you're not just kind of spraying and praying, if that makes sense.
Yeah.
And on the other side of that too, for us, from the investor perspective, right, it's very important that the entrepreneurs do that type of at least homework to know, hey, if anything, I first of all fit in their thesis, right? They very much have every fund, every kind of investor kind of has their particular focus of whether it be from a specific geography, industry, and what have you. The other thing too is that portion of the platform is just one of the many ways that we try to educate the founder on knowing that the game of fundraising is not necessarily a numbers game to try to get to as many as funders as you can and to connect with as many investors. It very much is a game of match and fit, right? Who are it's like this capital strategy for you and this fundraising journey for you is all about fit, because these are the very people that you're going to have around the table helping to build your company after you get financed, right? So the check is great, right? Money is super important. It's the fuel that fuels the growth of your company. We know that well, but it is very critical, specifically not even on the early stage, but even late stage, right? Growth stage. It's critical to really do your homework and find and think through the types of folks you want to have, around the table to help build your company for the long haul, because they will be with your company for the long haul, all throughout that process.
Yeah.
So that particular section is about mapping kind of the investors that are in our region. We have 2 other kind of sections on the Endeavor Edge platform as well.
I do want to hit on one thing before we move
sure.
on to that.
Yeah.
You mentioned at the forefront there, kind of vetting
Mm-hmm.
the investors that you're talking about, and then you mentioned a lot about like how important that really is. So I just wanted to see if you could share anything about like what that vetting looks like. Is that just that personal relationship that Endeavor has with it? And obviously Endeavor is a very credible organization themselves, but would love to just shed some light on how you're vetting those investors, because without naming any names, we've heard stories of investments in this region where it's just like, that investor probably shouldn't be, they shouldn't be on this list. They shouldn't be making investments here, and that hurts entrepreneurs. So would just love to talk about how you guys go about that kind of vetting process.
No, 100%. And we've definitely, seen those experiences, right, happen time and time again, not just from our region. This is something that happens in every underserved and overlooked market, right? In terms of, having somewhat of a local presence, or maybe, funders that by hook or crook, or even maybe not even knowing, sometimes aren't, kind of, thoughtful or exactly 100%. Absolutely. 100%. 100%. And not to get too much on a tangent of this, but, very much, it's for us, it's important that not only do we try to, vet these investors, but we're hoping that, one of the tailwind effects of this platform is to really help to set a standard and to breed somewhat of a culture, if you will, for people to know. Absolutely. 100%.
That's a good way to sum it up.
Hoping that culture can breed out, some of the, the bad genre and bad genes of folks who just don't know. Right. But no, so for us, again, we kind of, not necessarily from a vetting standpoint or a screening standpoint. I think a lot of our experience just comes from the number of years being present in our ecosystem, and knowing the experience of so many founders. We're able to kind of coalesce that type of feedback along the way. That said, again, I always commend as well too that, no investor's perfect. Even folks who get around the table and very much, have a cornerstone in the Hall of Fame of investors, right? No, everyone's, veiled to mistakes and fallacy. And even more so, what I definitely want to get to too is, I think if founders definitely come from a standpoint of viewing this process very much as a sales process, and not so much as like a just, not necessarily a power dynamic, but just a world against me type of perspective, or it sometimes can feel that way, of course, because again, investors do this type of work. Every single day. They meet hundreds upon thousands of founders every day, and maybe 1.5% to 2% of those founders get to the deal table, right? So, they do this, right? At the same time, founders, even if you're a second and third time founder, you still can count on your hand the amount of times that you've got to the fundraising table.
That's what I was getting at earlier. It's like you got to set those expectations, because you got to set the expectation that you as a founder, when you go fundraise, are going to talk to more than 100 investors, and 1 or 2 of them are going to say yes.
Absolutely.
And that's a sales mindset, to your point.
Yes.
Is when you prepare them for that sales mindset versus whatever else mindset they might have.
Yep.
Pick your one, but you can't have that victim mentality. You got to be, a lion and go eat what you kill.
For sure.
And you got to look at it like that.
And to your point too of like the vetting, right? How entrepreneurs can kind of, if you view this process again, like as a sales process, then you obviously, the moot point customer, right, that you're targeting is this investor, right? So, again, when you're kind of, from the standpoint of knowing your customer and letting your customer drive your product, right? You got to know as much as you can about your investors and the folks that you're bringing to the table. And again, like the surface stuff that we always talk about, of course, is, focus, thesis, geographic focus, stage, that sort of thing. But more in-depthly, right? Being able to really establish that relationship early on with those investors really help you to give like the smell test of the type of person that they are, the type of investor that they are, how they treat founders. More specifically, like, do they believe in your vision, right? Do they see what you're building? Do they believe in what you're building?
Yeah.
Like there's so many other layers and dynamics to getting to know the, types of investors that come to the table. And it's crucially important, again, for founders to, leverage your relationships for other founders, leverage relationships of, wonderful organizations like us.
Get reference checks on these investors.
Man.
It's something
100%.
Don't just listen blindly to an investor. Go talk to their portfolio companies and say, hey, is this investor, practicing what he's preaching?
Mm-hmm.
Because that's important.
Something cool that I heard that I would definitely do if I was ever raising capital is try to talk to a founder whose company didn't work out so well, and what was the relationship like when things weren't going great.
Yeah.
Because it's easy to support a company when, you know, your money is growing and it's going well, but, you know, if how did they behave when things weren't as hot, and you know, what kind of value add were they really able to provide for you when times weren't as great? And I think that's just something that if I was ever raising capital, I would definitely try and do that for sure.
Absolutely.
Geographically, this list, is it spread out around the United States, or is it mostly regional VCs?
So this one particularly, I know, is more heavily prevalent for U.S. And we kind of strategically, you know, did that mainly because we were focused in kind of on our region, and kind of wanted to supply investors there. That said, it's a open source. The platform itself is open source, and the list is going to be continuously growing. And we're looking to try to, you know, bring more folks to the table that one, focus on our region, but specifically are looking to connect with those entrepreneurs.
I think it's more important actually to have right now to have more connections on regions outside of Kentucky.
Yes,
because it's a lot easier to get those, you know, local connections and to get a local list of investors. But one of the mistakes I think, you know, I made, and so many founders without even knowing make, and maybe not by choice, is they don't go out and get a perspective on coastal VCs on their business
for sure
until it's either too late or they never do it. And what is happening is, this happened to me, is that if you're that founder and you don't get that outside perspective, then your valuations are going to get suppressed easier.
Sure.
You're not going to understand what VCs on the coast care about or what they bring to the table compared to local. You got to treat it as like analyzing a market like you would in the housing market, and understand, you know, what are homes going for and what does the market look like.
Yeah.
And if you only look within like one little small cul-de-sac in a neighborhood, you're not getting the whole perspective of what a home could sell for in that area. And that's just what's happening to founders is like, you only getting a perspective from Kentucky angel investors, maybe on your first pre-seed round, or smaller VCs. And if they're only Kentucky focused, of course their valuations are going to be way lower than the rest of the United States. And that's just not acceptable anymore. And so what you're seeing is founders falling into that trap and not getting the complete picture of the market.
Yep.
So it's good you guys are bringing those coastal VCs and other VCs outside this area onto that list, so founders can say, okay, I'm going to talk to, you know, 2 VCs in Kentucky today, and then I'm going to talk to 4 on the coast, because, you know, I want to prioritize coast, and they should.
Absolutely. Yeah.
I think that's important.
And I mean, to that example too, as well, right? I mean, even when you talk about a housing market, right? You know, there's so many, you know, variables, right? And so many different types of styles that people like, and the types of, you know, again, you know, whatever kind of, you know, look, feel, or living kind of standards you're looking for, right? It's just so much. Same as the, you know, venture market, right? In the financing market. So, I mean, you know, to your point, like opening your aperture is extremely important, right? Because you do want to, you know, be able to, you know, bring more opportunity for it to find the best fit fund for your company. At the same time, that, you know, the other kind of, you know, I guess, you know, learnings that we've heard from entrepreneurs in terms of opening their scope and trying to find funders either from the coast or from Midwest even, right? I mean, valuations vary even across the Midwest, right?
Yeah,
let alone coast.
Totally.
But the key thing that I know that is crucially important as well for founders to know is, you know, different types of money comes with different types of school of thought in terms of how you build your company, right? So like, you know, you have perspective from, you know, Midwest who understand the kind of, you know, bootstrap mentality company.
Get to cash flow.
Yes, or huge on EBITDA, huge on all these kind of specific measures that are around sustainable growth. And that to us, Endeavor, we don't have a specific kind of check the box of what's best, right? It's just the different flavor of types of money.
Get a diverse opinion on your cap table. Get some of those Kentucky people that are more conservative, and then bring in a few of the coastal firms if you have that ability.
Absolutely. And then even on the coast, right? New York, Boston, Austin, you know, Silicon Valley, what have you, like, you know, they're super, you know, they don't have the same risk aversion, right?
They don't care about profits.
Here, right? They're about, you know, grow, get there fast. How can you be first to the market? How, you know, and so as a founder, right, that's the, you know, you have choice, right? What type of money, what type of thought, what type of, you know, again, you know, what type of leadership do you want around the table? Because again, these people are going to be around the table. They're not just giving you checks. They're coming alongside as board members, as people who are going to bring value to your company along the way. And again,
that's so important.
Yeah.
Because I've already felt this. I'm only on my, you know, after my first fundraising round.
Yeah.
I was able to get people on the coast and people in Middle America. And when I go to them and I ask them a question about the business, it's just amazing how different
Yes.
their answers are. And it's sometimes frustrating, but it's also good because the right answer is probably somewhere in the middle.
Absolutely.
Can you give any sort of example on that? To
Yeah,
shed
I
some
mean,
light
so
on
like
it?
our
just curious.
pricing model. So for instance,
I love this
when you
model.
have
This
like
is
a
great.
consumer product and part of that revenue model might be SaaS revenue and some of it might be fintech revenue.
Yeah.
There's two different directions you can go when you launch the product. You either go heavier and higher on the SaaS pricing
Yeah.
and focus on maybe you get lower conversion if you go that route, or you go way lower on the SaaS pricing and you just know that you're trying to get users in the door for the fintech on the back end.
Right.
And so this is a question I've been asking people is which direction should I go? The more conservative people would say maybe, hey, prioritize SaaS revenue first, because maybe you're not going after a big $1 billion exit. Go after something that's more profitable, which is always going to be SaaS.
Yep.
Or lower the price a bit, just get people in the door, and then on the back end, long tail, get the banking revenue and the fees from banking, which is not necessarily always as lucrative as SaaS. The
Absolutely.
multiples
Yeah.
are potentially less, but when you combine the two somewhere in the middle, you have a better answer.
Yeah.
And so I've been able to ask and get perspectives from the coast on, what is this initial revenue model? Because the direction you choose goes into that mindset of either you grow at all costs, you forget profitability,
Right.
or you kind of grow slower, maybe, focus on cash flow a bit more, profitability.
Yep.
And that is the opposite.
Yeah.
You start on a different price point.
And
that's just one tangible example.
It's key too to even hear like one, good for you and good for your team to kind of have that type of, varied kind of perspective there. Good for you also because, again, the early betters of companies, right, in this early stage, like, they have to have that acumen to give you the time for experimentation for your company, right? So when we talk about some of the, maybe, others or folks that don't have that type of risk aversion or don't know the types of timeline that it takes for folks to figure these things out, right? You want to find true early stage folks that understand that, like, in this moment in time of your business, you really are like they're underwriting the proof of your concept, right? And underwriting that risk. And if they truly understand that, then you know what I mean? Like versus like again, the plethora of the market, right? Like you have so many different funds that are especially coming into early stage nowadays, from the Tiger Globals and crossover kind of funds all the way through to early stage guys. And so sometimes, again, right, as a founder, it's important to know whose investment kind of thesis you're actually putting towards your company, towards the equity of your company, right? So, we've seen founders, we have them a part of our network that have shared about, experiencing, some of these, fantastic, huge, funds that, underwrite an incredible mega round, which is fantastic, but have these very huge expectations for a growth stage company, right? So again, I very always, go back to the point of like the two big challenges and the things that we try to solve with this platform of Edge is not only to help with the network access piece, but educating our founders, because there's just so much underneath the surface that as you navigate the journey, it's important for you to know.
Yeah, just another tangible example. And then Logan, I'm sure you got a question, but another tangible example of different mindsets on coast versus middle America was, I just recently got this perspective, which is people on the coast, they're way more conducive to do something like a SAFE. And if you do, let's say, a pre-seed round, and then you're wondering, okay, what's the next round look like? You're starting to prepare for that. People on the coast would say, just do another SAFE. That's your seed round.
Absolutely.
Do the SAFE as a seed round.
Yep.
You talk to investors around Kentucky. Oh, please do a price round. Please do a price round. I don't want this to be a SAFE anymore. I want to get it priced.
Yeah.
I want to know what my investment's worth, because with a SAFE, you're pushing off that valuation. But the SAFE's just better for the founder. It's better, to grow. You don't have to go through a bunch of legal, jargon on these contracts. It's just quick and easy. And that was another thing I noticed was, what are the actual terms and what are the investment vehicles? Are they SAFEs? Are they price round? Are they convertible debt?
Of course.
People in middle America, they want to get to that price round as quickly as possible, and they want that convertible debt. Whereas on the coast, they're just way more founder first, and they're saying, hey, make this a SAFE. Do the next round as a SAFE. And then when you have a better idea of what your valuation is, you can actually do that, then do a price round. Don't just do a price round because you want to do it as soon as possible. Make sure it's a valuation that actually fits the business at the right timing.
Absolutely.
And that was another thing I noticed.
Before we move on from that, I am just now getting to the point where I understand what a SAFE is and what that means. So
for sure,
just real briefly, high level, could you maybe describe, what a SAFE is and how it differs from a priced round?
Well, I mean, a SAFE is now the standard document for early stage fundraisers, and it was standardized by YC, which is like the go-to
Y Combinator.
accelerator, Y Combinator, for founders. It's like the most founder-friendly organization, I think, on the planet that I've seen.
We're a great
They're
partner
doing
with
an
those guys.
amazing job, really kind
Number
of
of Endeavor companies that are
uh,
YCs as well. So
yeah,
yeah,
incubating companies and bringing them to the market. But they created this just a standard document. It's very simple. It stands for Simple Agreement for Future Equity.
Mhm.
And it just basically offsets one of the problems you have as an early stage business. Is you don't know what your valuation is.
Right.
And so what a difference is between a SAFE and a price round is you're pushing off that valuation and just saying, when we have that priced round, here's what that can convert for, and you set a cap. And there's all kinds of ways to create discounts and caps. All I would say is it's just a simple document for founders to raise money with that is both easier and faster to execute a fundraise.
For sure. And we have template versions and
Yeah.
examples
Oh,
and
that's cool.
primers on, both
Nice.
safes as well as, convertible notes.
I mean, you literally
I mean, all these-
download
yeah.
the document off of YC's website and then
can.
just take it to
Yep.
an investor and you
100%.
change one line on it. That's how easy these things
Yeah.
are. And the alternative is either a price round again or convertible debt. And both of those are way more complicated and you have to hire an attorney for.
Yep.
And so like that is the difference.
For sure. And I always, bring to the table as well too, like it's always there's no cookie cutter, right? Approach, right?
sure.
Everything is kind of, very conducive in what's best fit for the company, for the team, for the founder at the time.
Yeah.
And so, but yeah, SAFE as well as, many other tools that we kind of talk about in that, kind of guide / primer section where we break down by stage what companies should think about and how we kind of walk them through from, initial preparation phase all the way through to closing and what to expect in terms of tools that are used. Another version of that I've seen, of course, as well is the KISS agreement, which is kind of what 500's, I would say, version of the SAFE. Again, the other thing too is, I'm excited about this tool. I'm excited about the platform because we really tried to help solve this capital access gap from a community standpoint. And so I'm hoping that this thing continues to evolve. Everything about this platform and each section of it is open source. And so I obviously am super excited about that piece just because the venture market moves all the time. New forms of capital are being used, right, for founders every day. Venture, of course, we focused on that for most of this episode, but it's still like a minute percentage of the type of capital that funds companies across the world, right? Like venture, there's only a small sliver of companies that actually leverage venture to raise their rounds. And so, our hope again is that this platform, this tool, and really the realm of how we support entrepreneurs around access to capital really kind of just, be somewhat of a catalytic driver for our community to kind of come together, resource entrepreneurs, and more specifically, continue to iterate as the market goes. I mean, we can all sit here and talk about all day how incredible of a year we had in capital deployment last year.
Yeah.
And then now kind of, in the first quarter, like, a lot of, experts, right? And a lot of venture folks are following the trends of the private market and kind of slowing down, right? So things change. It's a constantly moving and iterative market. And for founders, it's really important to kind of, keep not only a finger on the pulse, but staying connected and plugged into communities like Endeavor to help lead the way. So
Yeah. Well, one thing that I want to hit on, and this is probably the last thing before we wrap it up,
Sure.
is the education piece of this. So, and you mentioned this is all open source, and we're actually really grateful to be able to be a part of this
Yes.
with the content that we've produced around venture capital. So just talk about that education piece and how you guys are approaching that. And yeah, I would just love a little bit more detail on that part of it.
100%. No. So, again, this, the Edge platform is kind of one of the many tools, of course, that we leverage and use, around, educating founders. The third kind of piece and area of the platform that I miss kind of chatting about is this resource library that we've curated. And that, again, cuts across all formats of types of media. So we highlight everything from, books and best reads to articles, blogs, templates, and ready-to-use tools for founders to kind of grab and use, podcast recommended, kind of videos, and again, collected over the course of the 20 years of Endeavor, as well as a lot of these tools were curated as well as best practice for the mentorings and learnings that our entrepreneurs had in their sessions, right? So that for us was incredibly important to make all the resources that were placed on this platform to be, for founders by founders, right? These all kind of stemmed from the learnings of people's experiences and more specifically the tools that help them best. I would, definitely, from the sense of, best resources or maybe, recommended stuff or, kind of, things to maybe key on in terms of, things that we're constantly sharing, or maybe even I would say tools that we're constantly sending links for when we're working with entrepreneurs in the platform. One is very much our term sheet calculator. So there's one of the tools on the platform is Endeavor has a term sheet calculator, and we share a couple of others too as well, just to kind of give variability. But that tool is extremely useful and super. I guess one of the main common ones that we share quite a bit for entrepreneurs. One, so they can actually from jump, before they even get into the negotiation table, or even before they get into kind of the raise itself, they can kind of estimate a bit in terms of how much dilution that they kind of want to give. What's the kind of ramifications of if I take on this much equity, and again gives that kind of clear picture. So that's one of the great tools that I know that we share quite a bit. We have, gobbles of pitch deck templates, tools, websites that kind of help entrepreneurs in framing and creating their pitch deck. And even with us in our curation of mentorship around pitch decks, the materials that you create, important, helpful, help you to get the first kind of foot through the door. But what we really try to convene, and what our entrepreneurs love about the tools that we have, is really more so on helping founders frame the story and frame the arc around how you talk about what you're building, where you're going, and how you're going to get there. And if we try our best to really help entrepreneurs at all stages, not just early stage, how to make the complicated simple on what you're building and the future that you're going after, and how to sell it in a way to where people want to come along for the ride. It's tough, right? It's hard to talk about and explain in the format as if your grandma's at the dinner table. Like, it's hard to talk about innovation that hasn't been built yet, right? Or new things that you're creating that's never been created before. It's always tough. And so another tool that we share all the time is some of our pitch guides, some tutorials around, just storytelling and framing. And I'm telling you, founders at every level could use it and need it, right? Because every level requires even more.
Such a big part of it.
Yeah.
It's all Evan did a weekend thoughts on this. It's all sales, and that's all storytelling, and 100%. That's just such a huge part of the process.
I would be remiss too as well. I got to shout out a couple of just common reads as well. For those, of course, and listeners as well who are if this is your first time looking to fundraise, if you're even thinking about fundraising right now, classics that we always share, of course, to Secrets of Sand Hill Road, definitely a recommended read from Scott Kapor, who was one of the managing partners of A16Z. Venture Deals, always, right? Always the classic go-to as well too. In fact, I think their course is coming up. So the founders of Techstars and Brad Feld and the folks from Foundry, they every year put on these venture deal e-courses that's completely free for founders. It's on our platform. Happy to share those links in the description for here, but highly recommend for founders, especially if it's your first go at it. A number of other kind of just classic reads that just top of mind that I would definitely recommend. Holloway is another good one. Holloway Raising Capital Guide. It literally is like the breakdown primer for all the areas in stage of fundraising. So just a couple things to shout out there. Oh, one more. Sorry, I'm rolling now. Seed deals. So one of our fantastic Endeavor mentors, David Wilbrand, he's former partner. You guys are familiar.
We've had one. Yeah.
Former partner of Thompson and Hine. Teaches, of course, around the country on fundraising and about this, kind of capitalization that happens with companies. Now, of course, is a fantastic chief legal officer of a real estate tech company, Picasso.
Killing.
But he's famous for his chalk talks. But Seed Deals is a must read because it's his chalk talk and it broken down like a Bible. So
cool.
Shout out to David.
Those are some awesome resources. Thanks for shouting those out. Before we let you go here, we want to just take a second to plug all the different things that we've kind of talked about. So plug where they can find the Edge Network,
yes,
or the Edge platform. Plug where they can get in touch with you if they want to get in touch with you, and then maybe Endeavor broadly if they want to figure out more about that.
Absolutely. So first and foremost, would love for every founder that's listening to check out our newly launched access to capital platform called Edge. You can find that at edge.endeavor, ENDEAVOR endeavor.org. Definitely check it out. Give us your feedback on it, as well as share it out with other founders if it's useful for you. I definitely can learn more, of course, about our team and our organization Endeavor at endeavor.org. And then, ping me anytime on social. I'm a social butterfly. I love to chat with everyone and help as many founders as I can. So Ms. Ray J. Gray is my handles on all social. So happy to help if we're able to.
Awesome. Well, thanks so much for coming on. This has been great.
Super, man. Thanks for having me.
Absolutely.